Assalamualaikum dan salam sejahtera. We are from Group 5 and we have 5 people. The first one is Nur Maisara. Second is Nin Alish, Nik Nurin Atira, Nur Fatin Adlina, and myself, Dana Ashraf. I would like to talk about the introduction. The first one is HealthSouth, one in all of the most important healthcare service of the USA. Came into notice once the company was suspect of a massive corporate accounting scandal, the unexpected 2.8 billion accounting scandal that went for years, from 1996 to 2002. The founder and the chief operation officer of the corporate direct in staff to report every extra profit for the corporate to woo plenty of investors. The corporate was earning record profit by the year 2003, once its annual revenue was around 4.5 billion. It dominated the rehabilitation, diagnostic and surgery business. The first disadvantage held in 2002 once the corporate reported sold out share value 75 million. Right one this the corporate discharged a loss unfold that the corporate has been exceeding its value to the limit of 1.4 billion. HealthSouth, currently renamed as the Encompass Health Corporation, could be a leading tending and rehabilitation company that provides patient service in more than 1,900 locations in US, UK and Australia. Mr. Richard M. Mcc, he was the founder and therefore the corporate executive of the company. In the year 1985, the company changed its name to HealthSouth Rehabilitation Corporation, and a year later, the company became public by listing its share on the information system exchange for the primary time. The company started increase at a rapid rate. By the year 1993, it absolutely was the biggest company in its field with over 50 centers throughout the US. In this time, the annual revenue of the South has crushed the mark 1 billion for the first time. Throughout 1990s, the company unbroken increased through mergers and acquisitions within the year 1995. The company changed its name once more to HealthSouth Corporation to reflect its wholesome service regarding health and care and not solely rehabilitation.
Hi, my name is Nurin Atira binti Nik Faizul, was metric number 273031. So I will continue our group presentation with 5 duties for auditors. So the first one, we have adequate accounting record. So in order to ensure adequate accounting record, it must include all the asset, liabilities, receipt, expenditure every day. Financial position must be disclosed in a reasonable accuracy, and all the account must be compiled with the applicable accounting standard and Companies Act 2006. If the company involved with the goods, it must include stock taking underlying the year-end stock that is held at the end of the year, and all the details of goods sold and purchased in order to identify all goods buyers and the sellers. It also involves monitoring cash capital expenditure, the creditors, the debtors, contractor arrangement, stock and work in progress, and the last one is the company's plans and budget.
Compliance with legislation. The compliance auditor is responsible for helping protect an organization asset by conducting internal audit and inspection to ensure that the organization equipment and operation are in compliance with the law, corporate guideline, best practice and contractual agreement. The auditor may work alone or as part of a team to examine record and inspect practice, document the state of affairs, note potential problem and make recommendation to management regarding method to improve compliance.
The third audit role is verification of records. Verification of records is needed to ensure that all the information are correct and authentic. All documents and accounts, including statements of cash flow, balance sheet, and as well as statements of financial positions, need to be checked and verified to ensure there is no fraud or errors in those statements. This will make sure that the statements are free from errors, and if there is any fraud, There, the auditors can detect it. Not just that, the auditors can also interview all the employees of a company to verify whether their statements match with the statements or not.
Hi, my name is Izin Alish binti Muhammad Azrul Ardi with metric number 273033. Next, duties of auditors is truth and fairness. In this point, auditors are responsible to prepare an audit report which consists of financial statement with truth and fairness. In this condition, financial statement should be presented accurately and fairly in compliance with the specific accounting standard as MFRS and IFRS. The report should not consist any element of bias in their important data to ensure that the customer cannot mislead the data, which can lead to fraud in the business.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fatin Adrina binti Ishamuddin. My metric number is 273055. In accounting term, adequate disclosure means a term that ensures that all important information in the financial statement is provided for an investor or creditor to depend on when reviewing a business. It is also referred to the ability of financial statements, footnotes, and supplemental schedules to give a comprehensive and clear descriptions of a company's financial position. Internal and external auditors work in order to make sure that a reporting entity, such as a private sector company, non-profit organization, or government agencies, offers adequate disclosure for the entity outside of the business, such as creditors, stakeholders, and investors, depending on how the data is used. If the organization does not have an in-house auditor, they will hire an external auditor in order to organize the account. The credibility of the financial statement compilation process will be double-checked by an internal audit committee. If it is found that there is inadequate disclosure in any sector, the problem will be addressed.
Hi, I will continue this presentation by detailing the financial scandal involved in HealthSouth Incorporated. HealthSouth Incorporated is a successful company provide healthcare service in USA. This company consists of over 48,000 and over 1,700 facilities across 50 states and overseas. On 2003, this company has disclosure to have fraud, which went for years 1996 to 2002. The fraud involved numerous of executives where they disclosed overinflated profit as essential to attract more investors in the business. This company has controlled the medical, diagnostic, and surgical industry and reported $4.5 billion annual revenue in 2003. However, first issue arose in 2002 when this company has illegally sold $75 million in stock. Nevertheless, has released a loss statement. Since the company went public in 1986, the company has been able to misrepresent its financial statement since it had overwritten most internal control and manipulated the external control. When the fraud was discovered, investor reviews that the management had overestimated profits by at least $2.7 billion over 17 years period. Hence, the CEO of accused of fraud but released on all counts. He was discharged with fraud along with the CFO of the company, and other executives were released from prison years in jails. That's all from me, and my three members will continue this presentation.
Hi again, so we continue with the effect of fraud to the auditors. The auditor responsible on HealthSouth is Ernst & Young, or is called E&Y, fails as auditor to recognize the fraud happened in the company. So HealthSouth aware about the E&Y materiality concept and use it as their method to keep the fraud silent. For example, we can give like HealthSouth know the limitation for examining fixed asset based on E&Y perception. Like the maximum is $5,000, so the employees or the one who's responsible will make it less than the limitation amount, so there is no doubt for that. There's also a lot of complicated procedure and process if they want to make a relevant change, which include in changing of journal entries, ledgers, and so on. Okay, the CEO of the company, Scratchy, can easily manipulate the amount of figure based on his own preference because company not properly apply corporate enterprise resource planning software for the accounting system. At the end of the period in annual report, because of the internal audit secretly kept away from doing their duties, E&Y just noted that the internal audit function was lacking in independence and training and also understaffed. Auditor have received several warnings about the fraud that happened in the company. One of it from the Michael Fines, which is the bookkeeper that used to work in the HealthSouth, and he sent a letter with 3 specific accounts that involved with the fraud. But they make a speculation that Mr. Vines is just a disgruntled employee. The other one was from Flesh shareholders, where he sent the specific warning through the email to E&Y. Unfortunately for both, E&Y just simply asked the explanation from the CFO of the company instead of investigate or research about the account. Even at the end, the ethical error rely on E&Y's side as well, but E&Y found out that not involved with the scandal as it was all planning by HealthSouth. But we can clearly say and see that they're not doing their job properly as they should, since a lot of hint and warning was given. It shows that they fail in carrying out their responsibilities as auditors.
Next, the auditor's role in managing scandals. The auditor's goals are to get fair assurance that the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to provide an auditor's report with the auditor's opinion. To achieve those goals, the auditors should know their role, whether the business got no fraud or involved in the fraud, such as this company, HealthSouth, which was involved in a big scandal in 1998 for misrepresentation of the financial position of the company and the failure to disclose the negative trends. In this case, the auditors should first know about the codes of ethics of their company, such as integrity, keeping promise, and also loyalty. But in this case, HealthSouth did the opposite. They are having none of these values because they are minding their own wealth and well-being before the rights of their shareholders and creditors in order to provide accurate and reliable financial information of the company. The CEO of their company held the team together and took advantage of the psychological urge to help people they know rather than they do not know. The auditors in the HealthSouth, which is E&Y, also failed to offer an independently qualified financial statement to the people outside of their company. The audit team failed to understand the ethical implications of their actions on the public, and they failed to notice a massive, long-running accounting fraud that was right in front of their eyes. So, in order to imply the codes of ethics, the auditors of HealthSouth should do their work well by providing the right financial statement of the company, even though fraud existed, as that shows the honesty and fairness of the auditor's role. Next, the auditors should identify and assess the risk of material misstatement of the entity's financial statements, whether due to fraud or error. This is because when the auditors fail to do so, the amount resulting from fraud is higher than for one resulting from error, as fraud may involve collusions, misrepresentations, and many negative effects to the company. The auditors should obtain sufficient and appropriate audit evidence to serve as a foundation for the auditor's opinion. When HealthSouth discovered the fraud, they were trying to manage their financial problems which were caused by the misrepresentation in the financial position by hiring a reconstructing team to help them with their reconstruction. The company made all payments, including possible liabilities, and reorganized the finance of the company until the end of year 2003. They managed to avoid bankruptcy. They also sold all of their underperforming facilities in order to minimize the losses so that they could restate its earnings and file returns again in order to disclose the actual financial position of their company after the fraud case. The company also released its stock in the New York Stock Exchange once again in the years ahead. The company sold and restricted its various divisions, branched into various offspring companies.
The next effect of fraud to the auditors is close examination of facts. Close examination of facts is vital to determine whether the information are correct or not. This is because it can really help the auditors to determine any fraud or suspicious statements. So, if they think there is something wrong with it, they can investigate it and find out whether is there really a fraud. So, if there is any fraud in the company they are auditing, they can definitely take actions to stop the fraud from keep on happening. In this case, HealthSouth's auditors only relied on few people for the data, which caused the fraud had gone unnoticed by them. Not just that, the auditors also did not audit their contractual adjustment account, which in this account, health states have been overstating their earnings by $2.5 billion. This clearly shows that the auditors did not audit their accounts properly and thoroughly. They also did not do close examination on facts of HealthSouth properly, because if they do, they will definitely notice the fraud that has been going on. Not just that, an auditor should also audit fixed accounts as well as accounts that have huge numbers in it. This is because one of the ways fraud can happen is through embezzlement of fixed asset account, since these accounts have huge numbers and the amounts rarely change. As we all know, a fixed asset account might comprise multiple and numerous facilities, which the auditors might not check one by one all of the facilities. This is clearly a chance for people to do fraud, because the auditors might not check all of it and they might not realize it. This is clearly shown in HealthSouth's fraud case. HealthSouth managed to execute this fraud because they hide all these false assets under their fixed asset account, which has numerous facilities. So they are confident that the auditors might not check all of the facilities one by one. In addition, their accountants have been providing fictitious supportive documents to the auditors to cover their company's tracks to ensure that the frauds will not be sniffed by the auditors. The next one is do not assign the same auditors over and over again. An audit firm should not assign the same auditor over and over again just for the same company. This is because the company will definitely know and understand on how the auditors work, what are their practices, and what documents and reports do they usually refer and use to check. When a company clearly knows about this thing, they will definitely be smart enough to do the fraud and hide it properly, because they know what they do will not be sniffed and found out by the auditors. It is because they clearly know what and how the auditors work and what are the documents they check during the audit process. In HealthSouth's case, their CFO at that time, William Owens, used to work in Ernst & Young previously, which Ernst & Young is the audit firm for HealthSouth's company. Since he has been working there and there has been no issue with him, the auditors clearly believe that there has been no problem in HealthSouth and there are no frauds there because their past employee from Ernst and Young are working there and there has been no issue. Last but not least, an auditor should always question the management of a company. If there is any misrepresentation, they should always question the management so that they can find out whether it is a fraud or just an error or misstatement. This is done to determine if there is any lack of integrity among employees in the company. The auditors can ask the employees whether they notice any suspicious transactions or suspicious activities done by other employees. Not just that, they can also create a channel for whistleblower for employees who feel unsafe and want to feel secure if they tell the truth about the company. As for HealthSouth's case, there was actually one whistleblower who emailed the auditors about the frauds in HealthSouth's company. But the auditors did not believe that mail and they just brushed it off. Not just that, to cover up their tracks, their CEO at that time, Scratchy, has ordered the accountants to fix the books and falsify the documents so that the auditors will not realize it and they can continue doing the fraud.
So the conclusion, there are times quite once when the company of the US was put under a shock and a huge blow by the huge company scam coming into notice. The company had numerous probability to a bad at place. The initial executive of the were also loyal to every alternative in execution of the corrupt practice. It shown lack of ethics when its objective was convenience for the executive to fool the innocent bunch of individuals who had invested within the company instead of making their own way. Another issue that currently via a job is allowing the fraud to take place was that the management of the company was dominated by many individuals, while not effectively checked by the board of directors, the audit committee, and also agencies selected to scrub such practice. This scam could be a classic case in structural failure, wherever the law is enough once the great human take precedence over their ethics.